How's it going, self-financers? My name's Paulo. I don't even know what they call me sometimes, but I do know one thing for sure. I love Vespas. No, I'm just kidding, but I do love them. It's a big trend now, right? Getting around the city, getting from here and there, making deliveries on smaller, compact vehicles, e-bikes. Those are getting up there. I saw an e-bike for sale. It was a nice one, fully decked out, went really far, had all the bells and whistles, extra distance. The thing was like $5,000 for a bike. How about those carbon mountain bikes? You can get up to $10,000 easily, plus for a bicycle. Woo! Times have changed, my friends. So, how's it going? I adapted a process to change the way that I'm accumulating savings so that I can do more for my family, for myself, for my charitable causes, and I'm bringing it on to you, to Canadians, because I'm only licensed to actually do business in Ontario, but my colleagues are all across Canada. So if you like what you're hearing about this process and you want more information, just let me know, and then we can pass that on to somebody else to help you. So I have a company called Self Finance, and what it means is that, just like it sounds, you self-finance instead of using a finance company or a lender and jumping through hoops to be able to get a loan and then send payments away to this finance company plus interest. So you end up giving all your money and all your payments to them. You instead capitalize your own savings system for a couple of years. That's the only thing about this process, that it takes a long time, but you're going to be here anyways. So by capitalizing a financial system that you're going to be able to self-finance things with, this allows you to not give away your money to the finance companies. You're able to capitalize the system for a certain amount of time, then you can stop, and then it continues to, from day one, it's generating interest and compounding every day while you sleep, while you're showering, while you're doing whatever it is that you're doing, and then you can stop if you want. If you want to continue to fund it, you can. It will just grow faster, but you can stop at a certain point when you know that it's at a point that's enough to do what you need it to do. For me, it was for vehicles. I'm obsessed with vehicles. I always have been, and I like to buy and sell different vehicles throughout the year. You car enthusiasts out there, you know what I'm talking about. When that perfect one comes along, you want to be able to jump on it. If you don't, someone else will. So I used to need to have to liquidate or sell something to be able to afford to purchase the next one or apply for a loan, and I would usually lose out on that opportunity because it would just take time. And to go on with that, if I would have gotten a loan from a finance company, I would have had to, if I would have gotten approved, I would have bought the vehicle in this case, and I would have sent payments away to that finance company for a couple of years until the payment was paid off, obviously. All those payments would have went to them though, plus the interest they charged, and I would have been left with a vehicle, but my financial status would have been lowered, right? Because I sent all the money away from them, and I would have had to, and if I needed to do it again, I would have had to do the same thing, continue to send money away. In this process, you do it once too, like I was talking about at the beginning of the video. You capitalize your system once, then you borrow from this, from your self-finance system. You pay for your vehicle in full, and then the payments that you would have made anyways to pay back the lender, you just pay that back to your own self-finance system, so you collect and accumulate the money for next time. Plus what's grown, because I mentioned it's always generating interest. So once you pay back the money that you borrow this much, you pay back this much, but now you have this much to use. You do that again, and what happens? You pay back what you used, and you use it again, but you don't use this, you use this if you want to, because now you've got more. So each time you finance something, it could be anything. You could use your imagination right now and think about what you would buy or what you need to buy. Every time you pay it back, there's always a little bit more. Or it depends how long it takes for you to pay that back. It could be a lot more. Just kind of depends on timing, how much you're capitalizing into your system, how much money you have, how much compound interest is being generated. When I started my system, I was only, the first year was I think $3 a day. And then it was $5 a day the next year, $4.50, and then it kept on going up. I've only been in it now for 6 years, but it just doesn't go up by a certain amount because it's always compounding. So now I think I'm up to about $30 a day. So that doesn't sound like a lot because it's per day, but times that by 30 days every month, that just shows up and I can't do anything to stop it. It's passive interest being accumulated inside a saving system that I utilize, and it's liquid to use for my passions, for the things I'm doing anyways. So when this kind of interest is coming in, and I'm paying interest on the loans that I'm borrowing in my system, because they do charge interest. Now this interest that I'm earning is offsetting the interest that I'm charged, so I'm always getting ahead. So not only am I ahead financially up here each time I pay back a loan, but the interest that's being charged when I borrow finances, it's not bringing me back down like it would in my first financing example, like the majority of us do, right? We go to a lender or a bank, borrow things, we're always brought down, and we start here, and then we go into debt, and then we have to make payments back to get back to the zero line. Here, you finance, you capitalize your system, and you're always going up. You're never going down. This is how the wealthy get ahead. This is how it works. It's very, very simple. So in banks, as you know, you have to save, and then you buy something and it goes back down, right? You start from the zero line, like I've just explained. Here you borrow against your money, right? You have the ability to borrow against your money while it's constantly growing. And this is why it's constantly going ahead. So this is a feature within your high cash value dividend paying insurance policy. And I use that as a tool to implement the process that I've just been explaining to you. It just happens to be the best tool that I've been able to find to implement this process. And you know what's beautiful about it? That by default, it gives me because it's an insurance product, it gives me the insurance benefit of paying out a windfall of money to my family in case anything were to happen to me. Not in case or not if, but when something happens to me, because we don't have a best before date stamped on us, so we don't know what's going to happen. And isn't that nice to know that you care enough to save inside an instrument that's a heck of a lot better than your bank, but it also has this benefit of the insurance payout when something happens to you? I can't find anything better to implement this process. If you know of something, please let me know. I'm always willing to learn. So hope you learned something. And if you have any comments, please leave them below and let me know what you want to hear, what questions you have. On my website, redirectandcollect.com, there's a way to make an appointment to speak with me. It's a discovery call. It's a 15-minute, 20-minute discovery call. You can't buy anything. You have to apply for this process. So all these benefits that you're hearing, they're all a moot point unless you get approved. So you can't buy anything right away anyways, and you don't have to make any decisions. It's discovering to see if this process is right for you. If you're banking and you're sick of them using your money to loan out to other people to generate a profit and not sharing with you, if you like that, or if you're okay with that, then this probably isn't for you. Or if you like the fact that when you buy something, you're always starting at the zero line, having to save again. If you're okay with that, then this process isn't for you. But having all the benefits that I mentioned to do with your banking, and be able to access capital from the system, be able to achieve objectives to purchase things using this vehicle that's constantly growing and will also have a payout for your family if something were to happen to you. If that sounds more appealing to you, then this process may be for you. So hope that helps, and hope that motivates you to look into this process a little bit more. And again, my name is Paul Busca, and it's the self-finance process. Thanks, folks. Bye-bye.